Welcome, ladies and gentlemen, to a new issue of the Grey Market Talk. We skipped last Sunday because Nick and I were still busy talking to students. We held our seminar and there was quite a bit of work involved with that, which we didn't expect as semi-retired market professionals. Who are we? I'm a retired options market maker, and Nick is a decent retired half-god in financial markets, especially on the bond side, chief investment officer with, let's say, 100 billion today. I usually vary between 50 billion and 200 quadrillion assets under management. Former bond market maker, bond trader at the big names in the industry. And we want today talk about what concerns markets in 24 as compared to 23. And we have a top 10 list there. First of all, hello, Nick. Thank you for being my guest today.
You're welcome. Hello, Torsten.
So great. As we have that out of the way, did a little bit of marketing. Seminar was actually brilliant. I enjoyed it, didn't you?
Fantastic. It was really fantastic. The feedback was also absolutely great.
Yeah, that was nice. Well, nice to get. All my quants came, from all over the world. We had people coming from as far as California and as close as where I live in Idstein to our venue in Darmstadt. It was very nice. No, I was very pleased to have that. Anyway, so let me share this beautiful list which came to my LinkedIn box the other day. Can you see it?
I can.
From the good people of Bank of America, US Credit Investor Survey. And I thought, oh, that is interesting. What has changed in people's minds between 23 and 24? And we discussed that before in the green room. Is there anything we should put special emphasis on, or are we taking for the top? Nick decided, let's take it from the top. So I would start right there. Geopolitical risks has gone up this year compared to November 23. So we have, let's say, 2 short months in between. What has happened, Nick?
Well, I think we've had sort of more escalation in the Middle East, and fears of even more escalation in the Middle East recently since this drone attack on the US Army base. And we're waiting, I think, tonight even. So by the time this video is released, the decision will have been taken as to what the Americans want to do about it. And fear that obviously is a much more embedded problem in the Middle East. And if Biden can find a way to do a surgical solution rather than a broad solution, I think the market would prefer that.
This is actually scary weird, right? On the one side, people are taking especially in the Middle East, tensions building up with Iran, very, very serious. And you just have to open the newspapers. We're suddenly talking about conscription in the UK again, conscription in Germany, and the Swedish top general says, "Oh, there could be a war soon. This is now Europe and Russia and Ukraine." And all that stuff. At the same time, oil prices don't seem to be worrying in this, or seem to be of minor importance compared to November 23. What's happening there?
Well, I know you'd bring up oil prices, which is right at the very bottom of this sort of scary list, right? So it's people are even less worried about oil prices. You can see that. Firstly, they're least worried about oil, and the change in the fear on oil is much lower. Perhaps I'll throw something in and say, gas has been absolutely pummeled in the last few months. I recently did a chart for one of my clients. Gas looks like it's finishing its kind of death price. And it may well be in the next few months we see a major turnaround in gas. It sort of fits the cycles, and it also fits the Elliott wave pattern. So perhaps people aren't worried about oil. Perhaps what's not on this list is gas prices. Perhaps that's something that they should worry about. But effectively, they're saying, if there is a much more greater problem in the Middle East, that the oil producers at least don't want oil to run away in prices. They don't want a crisis. Nobody really wants a crisis. Everybody is doing their best to make sure that there is enough oil production, oil delivery. The tankers anyway rarely use the Red Sea. They go around the Cape of Good Hope, so oil isn't going to be sort of major problem for the markets. The
Isn't
gas,
the, isn't the Cape of Good Hope South America? I
the
thought
Cape
Africa's
of
Cap Horn.
what was it? Cape of
Cap Horn. That's a
Cape.
German.
Oh yeah, Cape. There you go. That's old age for you, mate.
Yeah. I was just confused. No, funny that you mention it. I'm sitting on a nice liquid gas position since May last year, and I thought I really this time timed it and bought the bottom. Now we are reaching the so-called bottom again. However, what I did in the meantime, I sold calls over it. I made quite a decent return on this little bugger.
Right.
Sitting there, and if prices shoot up again, hey, I can at least hedge my heating and housing bills. I've just got checked again, changed suppliers, and from 1st of March on again, they are introducing or raising their VAT in Germany again from 7% to 19%, which clips another cent on top of it. And if you use as much gas as I do, bloody hell, you think, what's going on here? I do not like that at all. Anyway, but that's why I brought the oil prices in, because that is one of the conflicting points I see here.
Absolutely.
You know my theory about maybe we are already in a recession and people keep lying in our faces. We'll come to that in a minute. And that would be an explanation why energy prices are so depressed. Gundlach came out on an interview I listened to last week where he said he's not totally convinced, but he could see oil going down to 40.
So I was asked about oil actually on your course by somebody, and I said at the moment, if you look at what's happening to the technical side on oil, the oil price is really just sort of doing anything, and it really does open the door to a bigger rally or a sell-off. And I'm sort of looking at somewhere between 50 and 60. They're both options are open. The charts haven't sort of determined one way or the other. In the bullish case, I think we need to really go above 90 to kind of confirm it. The bearish case, oil could go up to 90 and then still come down from there. And why is oil struggling? And it could well be, and this is not just because you think that the global economy is suffering. And actually, if you look at the American economy, it's not suffering. The Americans have been pumping oil out of the ground and gas like crazy. They have been absolutely, producing like it's going out of fashion.
Yeah, and because they're not stupid like we are. Yeah. Switching off our nuclear power plants, banning gas, wanting to ban coal, cutting off our gas supplier, and Europe is in a pickle, and still prices are coming down. Yes, there is an explanation for you. The Americans are opening up the siphon. Even when you listen to OPEC and they say, oh no, we are not on, it's called the marginal supplier side this time. Very interesting.
Absolutely. And Biden has just banned the export of gas, I think from Texas. I don't know the full details behind that, but there is also now some issues that may well, give a reason for gas to actually bottom out if the supply of this excess gas isn't actually coming into Europe. May well be that Europe has the bigger problem than anyone else.
Well, it's always the question.
As usual.
When they start hoarding energy, and you hear this continuous drumming of the next World War thing going on, I'm almost tempted. So are they drumming? The dangers of World War III because energy prices are so suppressed? At the same time, they're filling up their storage facilities. The Chinese are doing it for quite a while now. Have you heard anything? Has America actually restocked their strategic petroleum reserve?
The Americans don't really need to be honest with you. The Americans have enough production capabilities, within their borders that they don't really need to sort of stock up the SPR. And I think, Biden may well want to try and buy it cheaply if the prices go down. Trump already tried that at much, much lower levels, I think in the 40s or something like this, and was blocked. So Biden may well try to do that, but only at cheaper levels. But why? They don't need it. They can produce as much as they want, from the reserves that they've got in the commercial state. So they're not going to struggle. The issue about this war, the thing about conscription and, everyone's coming out with World War III and this Swedish general was saying, prepare for war. I've got to say, everywhere I see it, it comes from countries where, the politicians are under pressure for either in Sweden, it's because of immigration, in the UK, it's because of immigration and, lack of growth. And I wonder if it's a deflection thing more than anything else. And, I just find it coincidental that these are people who are probably going to be forced out of office very soon.
Yeah, well, it's mostly people without children who are very strong on the, let's supply people with war goods and make all this crap going on. I don't even want to talk about it. But that's actually United States, special case, especially with the energy side. You know that the North Korean have a concept which is called, I probably pronounce it wrong, yuhe. Yuhe means we are completely self-sufficient. So by all means, the United States could fully embrace the North Korean philosophy of yuhe. They can feed their population. They have enough energy. They produce. Well, it explains a lot, right, in geopolitical terms, why the United States is so strong. If you have this strong shoulders to actually be able to domestically manage all your crises, you are in an unbelievably good position.
Absolutely. And we've referred to this before in our videos. The responsibility of government is enough energy for your industry and enough food for your people. And the Americans certainly can do that.
Yeah, that leads us nicely to the biggest concern in January 24. As if I just look at the charts, do ocular regression, just look at it, US 24 elections seem to be a major concern. Why could that be, Nick? Why is the market concerned about the 24 elections in the United States?
What's amazing is that they weren't worried about the 24 elections in 23, but in November, this is November 23, so it's not really that far ago. So what's happened in the last 2 months, right? I mean, in the last 2 months, suddenly people are saying, well, that's an issue. And I think, more and more, there is a quote unquote fear. On the one hand, that it's very clear that, Trump is the front runner for the Republicans. But at the same time, it is also highly probable that, from all of these charges that are against him right now, that he will be, is bound to be convicted on one or two of them. And what would that mean? So, I think there is a really good reason to say that we do not know how the people will react if either their front runner suddenly, is prevented from becoming president, or at least becoming, against the Democrats, or he is blocked for some other reason. So fascinating, I must say. I mean, we're not in America, we're not able to vote, but I guess this is a pretty serious things for the American.
Well, he's incredibly polarizing, right? And the concerns here on this chart actually coincides with when his poll values went up. Yeah? People realized he has a very, very decent chance to become the next president of the United States again, especially if he's running against Biden. And if you look at President Biden, I do not see him actually being able to master even a 1-hour debate with Trump live on television. Yeah? So that is the wild card. Whom are the Democrats are going to pull out of the hat to get into the ring? I do not, maybe a bold forecast, I do not see Biden actually competing against Trump. That will be a Michelle Obama or a Gavin Newsom from California, or for all means Oprah. Then you have two TV personalities running for president of the United States. Even The Rock, the wrestler, is one of the wild cards to be. I might vote for The Rock. Yeah, I didn't get Arnold Schwarzenegger if I could vote, but The Rock, yeah, decent guy. Yeah, made millions. Is a bit of a capitalist secretly, but a decent, decent actor. Like his films, The Fast and the Furious. I think I've seen 4 or 5 of the 27 that are out by now. Possible candidate, US elections, it all hinges on Trump. And that is one of the interesting points. Thinking about what's happening at the moment, because recession, let me jump a little bit. Recession has come down as a concern in January 24. Even though I have the impression, when you look more detailed into the numbers, and I mentioned Jeffrey Gundlach before, when he said he doesn't want to put his tinfoil hat on, but maybe we are already in a recession. That's why the Fed is considering taking rates down, and the market is doing it as well. And he made it clear on the employment numbers that came out. He said, it's actually very interesting. Employment numbers for the United States, extremely strong. Then you go down on a state level, and almost all of the states, not all of them, 80% of the states have declining employment levels coming in. And the other guys who don't are places like Wyoming, where 3 people live, not California or New York. And he said, how is that possible? And then he came to the point and said, yeah, well, they show you the numbers. Then they look as in expectation what the market thinks should be good numbers. The politicians are happy, and at the press conference they can say, oh yeah, employment looks fantastic. United States economy is awesome. And 4 weeks later, they bury the revisions next to the obituaries. When you see huge mistakes in the official forecasts that came with really the actual numbers that came out. So what's your take on that, Nic? Can we still trust the official numbers, or is it all just a game of throwing dice?
Well, I don't know. I've never trusted the official numbers, but obviously, it's what people believe is kind of in the price of, stocks and indices and things like this. So, it's really what the market participants believe. But, coming down to this, you think about what the Fed, trying to understand, the Fed acting because they see a recession on the, in the future. I don't think so. I think, at the end of the day, these guys said about a year ago or longer that they're going to raise rates, they're going to cause pain. They want to influence the demand side of the economy. And what's happened since they influenced the demand side of the economy? So we talked about them turning the dial up, and I called it the idiot in the shower about a year ago on LinkedIn. The idiot in the shower is turn the dial up really hard because, they're in the shower and it's cold water, and they turn it full on and say, oh, nothing's happening. And then suddenly it gets, scalding hot water. They turn the dial up to influence demand. What happened to demand? Well, growth, if you look at what GDP did since January last year, let's just say, it's gone up from, I think, annually 1.7, 2.4, 3, 3.1 on an annual basis. Growth has gone up. So growth has gone up whilst they've been turning the dial really full on. Europeans have been doing the same whilst actually growth has been going down. So the Europeans just copying the Americans. Why are they doing that? And now, with consumer confidence booming, with the stock markets at all-time high, so people's wealth effect feeling fantastic, you would expect that the guy who's sort of announced that there will be pain, whilst everyone is highly euphoric, he's basically saying, actually, we are going to reduce interest rates. We're going to, further stimulate the demand in his eyes. We're going to turn the dial back down a little bit. And why would he be doing that? Why would the Europeans? Well, the Europeans shouldn't have been raising rates in the first place. And you could argue that the Americans should have stopped a long time ago. But I find, if you want a conspiracy theory, and I think, Jeff Gundlach, I have full respect for, but the conspiracy theory that I have is to say, well, the Fed have been kind of working for this day. They have been working to the point where they can say in the election year, we are going to be sort of releasing some of the pressure in the economy. And they were hoping they're going to be releasing the pressure with, weaker growth, with lower employment and all of this stuff. But actually, they're releasing it, with all of these good things happening, which is kind of against their mantra. So they are trying to could argue, they're trying to keep the incumbent party in power. And perhaps this whole thing is an anti-Trump thing. That's a conspiracy theory for you.
Trump will be again the lucky guy, not in terms for the economy, but it's probably they're trying to ride a dead horse, and eventually reality will catch up with you. And if that happens before the election, then Trump has huge ammunition to actually point out what is really happening in the economy. Because tinfoil hat on again. On the same conversation I was listening to, Gundlach was also, what's his name? David Rosenberg from Rosenberg Research, famous of The Big Short fame. Was played by, what's the name of the actor? Anyway, what he said, and it's an interesting point, brought me back to university. GDP, you pointed that out, is rising, looks good. Gross domestic income is actually negative. And in the real world in the books of economists, GDP and GDI should actually be roughly the same, because the income on one side is the production on the other side. So that made me curious again, because once Gundlach was pointing out something is fishy with the official employment figures, and then Rosenberg points out that yes, the actual income is on a declining path, while GDP looks very, very stable. It's again these alligator jaws going wider apart, which explains a lot of things on this chart. Yeah? While you were talking, I also thought, oh, look at commercial real estate. Big worry, bigger than last year. At the same time, if we go a little bit further down and look at rising interest rates, not of a big concern. Now, one would assume, if one is of sober mind, that somehow commercial real estate and rising interest rates might have a relationship which is adverse to rising interest rates. You know, all these things taken together, we have data on the one side, data on the other side, and then markets and people with their concerns show us something completely different, what is on the screen.
Yeah, I must say that those are things you can't join up here, because you could also link the one on bank stress, which has gone down also. So if you talk about commercial real estate, then who's the largest holder of commercial real estate, or who's more exposed to it? It's going to be the small banks. So if you look under bank stress, you would expect bank stress to also be elevated. So, I can't figure that one out, I must say. Maybe it's about people worried about the refinancing of some of these, these real estate projects in America that kind of got away with it last year, that even if interest rates go lower, they're still facing a refinancing wall at much, much lower prices. And if they're facing a refinancing wall at much lower prices in terms of valuation of the property, right? Then, and maybe they can't then refinance it, then what they have to do is sell their property. So the argument there would be, we still haven't seen the fallout from lower commercial real estate valuations, and that's still to come. And in a way that I could see that, because, commercial real estate we knew there will be a problem. We know that valuations have kind of hit, but we haven't actually seen people being forced sellers, other than in California or whatever. And I think people are possibly genuinely worried about, what might happen with regards, some of this refinancing thing that's definitely going to come up this year and next year. It's an unknown, right?
It should increase even further over last weekend, when the Hong Kong judge decided that Evergrande, no chance to recapitalize it, kill it. Yeah, 270 billion is usually what goes to the press, what they have in debt on their books. That is a biggie out there, yeah? And that doesn't throw the Chinese economy into a good light. I saw the PE in China on average is now 8 for stocks, compared to over 20 in the United States.
And now, what's happening in China is there's very little kind of investment in China anymore. And so there's no international investment coming in. The consumer confidence is very low. Savings are growing higher, and they don't want savings to grow higher. They want savings to grow down so that they can go and spend some money. So for the first time, you can imagine this. I don't remember last time I saw this, but the Chinese authorities, and you can see the China stress here, doubled from what it was in 2023.
Yeah.
What did the China authorities do? What they normally don't care about. They don't care about capitalists. They don't care about stock markets. They don't care about all of this stuff. And in our last video of 23, when we talked about, what are the things that are sort of potential areas of which have been absolutely destroyed. Maybe they're the winners for next year. One thing I mentioned was the Hong Kong stock market's been absolutely killed. Still don't know when it's going to turn around. In the first week, the Hong Kong stock market collapsed. And what did the authorities do last week? They basically said to the state-owned banks, obviously the Chinese market is different to how the American market works. Chinese authorities actually sort of dictate what goes on. So they looked at the stock market and they said, well, that shouldn't really be going down. We don't really want that to go down because it sort of, again, feeds into the declining confidence in consumers. We don't want that. So please, state-owned banks, go out there and go and buy some stocks. So the state-owned banks went out there and spent, 200 odd, 300 odd billion dollars equivalent to go and buy some stocks. And of course, the market reacted, market rallied for a few days. They are trying to put a floor on, what would otherwise be a major crash in the financial system, which they're trying to avoid. And, as I say, they plug one leak and then another leak comes out and then another leak comes out. They've still got a very, very big job to do to stabilize their economy and get it into some shape. And that's very important when you are establishing, a BRICS economic agreement. You do not want, as the largest economy there with India, effectively, to have holes in your economy. And so they do need to stabilize this thing pretty damn quickly.
See, you just mentioned it, my favorite country. India is not on this list, Nick. People are not worried about India because they're plodding on. They're working on their democracy. They're working on growth. People are getting wealthier. And in the meantime, they stay out of all that crap happening around the world, mostly.
Yeah. Yeah. People are still worried about inflation, I see, and the fiscal policy. Obviously, those things are.
Yeah, but the interesting thing on inflation, they are less worried about inflation, and that's one of the points I actually agree. If you follow my line of arguing that we might even be in a recession already without knowing it, numbers are tinkered, inflation will come down. Yeah, we had this also. We discussed that a couple of weeks ago when I ventured that 3 will be the new 2.
Yes, indeed.
Inflation numbers.
I think, firstly, the central banks, whether it's just the Americans or the Europeans and the Brits, probably will firstly have to declare victory. And I think, the PCE number that was issued last week is a kind of annualized 2% or thereabouts. And I think the last 6 months, inflation in the States is around 2%. So they firstly have to say, we have succeeded. And then they say, it's now 3. In their own way. They might say a range before they said average, and they got that wrong. And now they might have to say range, and there will be definitely a 3 in that range as opposed to 2. And that just effectively says they understand. Why is it 3? They understand that that inflation is a monetary phenomenon, but they don't want to admit it, and they understand that they will have to continue to subsidize the government. They're not allowed to say it because otherwise they're not independent. They will have to continue to buy government bonds that are issued by the government, and that just means definitely more printing and more devaluation of their currency against stuff. Against what? Somebody said, well, if I sell the dollar, what do I buy? And I said, well, you ain't going to buy euro because European is you have to buy stuff at the end of the day, or you buy emerging markets. I think emerging markets probably in a much better situation than, from a currency perspective. But I think that's potentially the time for commodities. And you're already seeing a general pickup in commodity prices across the board.
Well, at least the data here is consistent, yeah? If people are less worried about inflation, then it makes sense that rising interest rates are also of lower concern, debt sustainability also of lower concern, stagflation is out of the window, and bank stresses would also support that, okay, we're not going to see that. Releveraging event risk has gone up, yes, of course. We discussed that over and over and over again when the debt wall is coming in. That is sustainable if interest rates are coming down as the market expects them to be. And we had a lot of conversations with our students, Nick, about what is the best bond trade. And we did show the bond math again. And if you follow that line of conversation, yeah, I still think now shifting into long duration assets is still the trade. Following that line, and then you said it, stuff. You need stuff. What is the longest duration stuff you could probably get? The Nvidias, Microsofts, and all the unloved super high techs, Magnificent Seven, you name it, on this world.
That's absolutely what's going on. growth companies have, we began the year with a growth started to sort of get rotated out of favor for about a week. And then it sort of very quickly came back into favor. And as you say, sort of what's the longest duration asset is a kind of a growth stock. And these growth stocks are doing reasonably well. I mean, extraordinarily well. In fact, nothing else is doing
Darius Dale called it immaculate disinflation still happening. Yeah. And I think he has a point here, just looking at the data. When our listeners are watching this, obviously Microsoft earnings are already out. They should be coming out tomorrow evening, I think. So we are posting this on Sunday. Will be interesting. Check it against what we were just discussing. How are the earnings in the top Magnificent Seven? Are they stable, or are we seeing weakness coming in there as well?
Well, you saw already the Magnificent Six. I think it's at 6 now because Tesla had some negative numbers.
Yeah, but it didn't really, we were just discussing Tesla, and yes, Elon I think he's a superstar, and yeah, be like Elon, if you have to be like anybody. But this whole malarkey with electric cars, we see that here in Europe. Our car manufacturers, from BMW to Volkswagen, they are in deep trouble.
Absolutely.
Nobody buys this stuff. They can't.
Europeans are under stress for different reasons. It's because the companies are run by government policy, and that's just not a way to run a business. But you're right. This whole sort of switch into EV, and there's not that much demand for EV, and he can't get his parts, and all of this stuff. It's a very, very difficult sector. I mean, the other one that I think we are doing this before Amazon's results as well. Amazon also look like they're not. I think that of the 7, perhaps Amazon is the next one to worry about. Yeah. My view.
No, I said that already on the air, right? I ordered the Cybertruck in 2019 when he came out.
Absolutely.
I made a killing in the shares because I canceled my order now officially for the simple purpose. It doesn't have the range it originally announced. It's more expensive than it is. Plus, electricity prices went through the roof since 2019. So all the benefits, besides pissing off the neighbors, are out of the window. I thought, no, I don't have to buy an electric car now, even as much as I like the little Batmobile. But I think this is a motivation for many people out there. So yeah, it's really interesting what this earnings cycle will tell us. You can't even call it a canary, the eagle in the coal mine, yeah? Microsoft. Microsoft has a stable business model, has a fantastic product. The world wouldn't run without Microsoft. Just sure. all the back tests, all the presentations, all the sheets we are doing for our little cop. In the olden days, Nick, we had to have 10 mathematicians in a back room to get stuff.
Yeah, absolutely. The efficiencies are immense. And although you talked about employment earlier on, we've spoken about this before, that this whole technology revolution that is entering industry. Yeah, industry can manage with less workers, and so you're seeing even these tech companies, releasing workers because they found different ways to automate, digitize, or whatever it is that they would be doing, and that improves corporate margins. So if you look at the earnings results so far, margins are not brilliant. In fact, margins are actually quite weak. But the analysts, at least, are still projecting high margins in the future. And I think that's primarily driven by the expectation that, there's going to be a reduction of kind of this high labor cost and an introduction of the cheaper technology solutions to replace some of that labor, at least. And that's a margin sort of benefit. And that's going to be the kind of the big story for equities, in my view, still going forward. Why buy equities? Well, I think margins will improve. Why are they going to improve? Tech.
Brings me to one point which is not on this list. Nobody seems to be concerned about social unrest at all. Not on this list. I think, especially what you mentioned just now, yeah, people are being rationalized away because corporates can increase their margins by using technology. We have, again, the topic artificial intelligence there. Let's assume for a moment that it's real and it's really intelligent and it can take stuff away. Money is sloshing through the system. We have this redistribution, and I can't believe as a banker I'm saying that. Money going from the bottom to the top. The top 1% will sit on these pots of money, which are newly created through their ventures they have, which are getting more efficient, more productive. And the worker on the street has to take, especially in the United States, not just 2 jobs, but 3 jobs to make a living. And nobody has this here on the card. Obviously, you hear a lot of talk about it in chats between people like ourselves. But if this is a market survey, I would have expected it somewhere in here. Not at all.
Yeah, I mean, implicitly, I think perhaps the election element is on the minds, because I don't know where this survey took place. This is probably a US survey. But
I think so, yeah.
In Europe, I think the list would be somewhat different.
So I think we went through most of it. What is your biggest concern? If you have the list and you had to pick one, Nic, what is the thing that is going to hit us hard next year or this year now?
The thing that we, I mentioned it the last video. I think it was 2 weeks ago, 3 weeks ago, whatever it was, and when I said that the event of taking the Russian money, moving from freezing the assets of the Russian central bank to actually taking the money from the Russian central bank, I think crosses a line when we do not know the consequences, we do not know the timing of the consequences, and things which are kind of the unknown issues are probably, for me, the thing to worry about. Everything here, with good politics, with good policies, with good management, with good, you could deal with all of these problems fairly easily. And if you look at the stock market today, nobody's worried about anything. We're filming this on Tuesday after the S&P was at 4,950 and, sort of reaching targets and extending targets. And nobody's worried about anything, So I think the thing to worry about is the thing that you're probably not thinking about today. And I must say, it's not got any attention from anyone. At least I haven't seen anything about what's going on, what will go on in February the 24th, about taking Russian money. As I say, everything else, am I worried about inflation? Not really. As I say, I agree with you. I think 3 is the new number. I'm worried about the debt situation. I'm worried about, therefore, the dollar. I'm worried about the BRICS, but the Chinese are not strong enough to do anything right now. As I said, risk assets, in my view, should be good for at least the next 2 years. Thereafter, don't know.
Famous last word. Let me just slip one in. For me, it's the social unrest, and I think you pointed that out. That will come out of the 2024 elections. That is a real wild card going on there. We might see really shit happening, or it might work out decently. That the Democrats win a sounding victory against Trump. He will put his tail between his legs and crawl out, and everything is fine. The establishment has everything under control. If that doesn't happen, or in the run-up to the elections, they arrest the guy or convict him, or all sorts of stuff going on, then I think the world is in trouble, because that has reverberations to the Middle East, to Russia, to Ukraine, to Europe. But funnily enough, there is not a single leader in the so-called civilized world who doesn't hate Trump's guts, right?
And that's where the conspiracy theory comes with the central banks,
Yep, absolutely. Good. So we got through that, Nic. Obviously, we didn't go too much into details of numbers because we had to record it on Tuesday to show on a Sunday. Are there any famous last words? I'll keep this list. I think we have to come back to that. It's brilliant how everything is pointed out and we can pick and choose. It's like the old, what was it, Walmart pick and choose menu?
Absolutely. Yeah.
For all younger listeners,
I think it's a very good list.
For all younger listeners, when Walmart was still on the high street, you had a pick and choose menu where you could get all the little goodies, sweeties, and put them in the bag. And obviously, everybody stole a couple before you put them in your bag and tried them out. So we keep this list. I say thank you, Nic, very, very much to you. Well, let me switch that off. Stop share. We can have the full real estate again. And yeah, we will see you then the Sunday after this again, and let's see what has happened. Then we actually have a lot of data to look back to. One last question, Nick. Do you think the Fed is going to do something this week? Because by the time people are watching it, they will have already seen it.
I don't think so. And I think they'll get some political clout or some stick if they start to cut interest rates with an unbelievably strong GDP number.
Yeah, I agree with you. This one. We'll see it in March then, probably.
Yeah.
All right. Thank you very much for watching us. Like, share, and see you soon. Bye-bye.
See you. Bye-bye.